Welcome in this video. Here's Steph Capital. In this video, I'm about to go through my trading journal in Notion, sharing with you all my journey of this week, how I was able to trade during this week, and showing you my medium probability trade, lower probability trade, and higher probability trade. What are the negative and positive confluence or a positive habit or positive goals, positive achievement of this week, and the negative, the opposite of that of this week. Missing trade I could potentially take to improve my strike rate. What was my habit? What was my habit during this week? I want to go through my Notion and share with you in detail everything. If you're first time to come across this video, make sure to like, comment, and subscribe. Don't forget to turn on the notification to not miss out my next video. In this video, we are talking about the financial market. Let's go. As you can see, we are currently on my Notion. Here are all the trades that I took this week. You can see on the left, there's a trade log. All the trades that I took during this week. I'm very clear, I'm transparent here, and I don't want to show, trying to impress anybody, trying to say, okay, I'm doing well, I'm not doing good. I have a very bad moment in trading. Sometimes I'm doing good, sometimes I'm going against my plan, sometimes I lack discipline. The things that I just keep showing up, try, fail, try, and improve every day, because I know since last year I was able to be more better compared. This year I'm more better compared to last year. There's no fact, there's nothing to say about that, because I know that if I keep putting the more work than the last year, I'll be more better in the next year. This is how I will become a professional trader, and it will surprise everybody online. Let's go straight to my Notion. You can see, guys, let's go straight, and here's my dashboard. As you can see, I have a 20% win rate over 30 trade, 20% win rate, because I took a lot of low probability trade, during this week. I took 3 low probability trade. How? On Tuesday, Monday, I didn't see any setup. I did not force anything. Monday, I did not force anything. On Tuesday, I took a very low probability trade. I tried to anticipate the move of the market, and I was trading against a strong bearish momentum on gold. And if you notice, since Friday, the market was extremely bearish. You can see here, the market was extremely bearish here. You see, the market was very extremely bearish. This is Tuesday. On Tuesday, New York session, I took a buy on gold, but the market, the higher time frame, medium time frame, lower time frame, all was bearish. But I tried to force a setup, trying to look for long, because if I was putting myself in a sell position, there wasn't any sell opportunity valid based on my plan. And because I see something was similar to counter pullback, then I just trying to force things, and I end up losing. I even revenge trading. I double my risk on this trade, as you can see here. This out of confidence. I even put it was low probability. Even there was some confidence that was that made my plan, but I classified as a low probability. I risked 1%. I lost. I enter again, because once I get in the first entry, the market trying to give me a very big bullish spike, weak bullish candle, and I trying to get in. This was a bullish confirmation, a sign that buyers are about to get in. Then it was a fake out. Based on that, I just add again another 1%. I end up I lose a 10k, my 10k phase 2 account on this challenge. You can see. Let's go straight down. Here's was the chart. You can see how the time frame, the market was clearly bearish. The market was very bearish. This is how I try to force things. I don't try to force things. If I try to force things. You can see here. This was the H1, very bearish. You cannot try. I try to force everything here. You can see how I want to buy. I was trying to force buy and target this opposite supply. This is how I forced. The first entry was here. The second trade, I double everything. As you can see here, if you check this is what the price stopped me first. Give me after this bullish candle close above, this bullish candle close, and I get in again. Once I get in, direct the price back down and take me out. But the good thing is that I was still following my risk management. This is the only thing that I'm consistent with. I don't play with that. I'm very consistent with my risk management. It's very important. I'm not play. Once I accept the risk, even sometimes when I want to take a low probability, I try to make sure that I stick to risk management, because it's the only thing. Yeah. And I end up lose this trade, and see, I lose. You can see here, those 2 trades. This was that trade on 17. One second trade. Exact time I lost 1%. This is 10k account. Before that, I lost 1%. The 2% last week, and this week I lost 2%. And see, this was my review about the trade. Yeah, my review about the trade, and I'm very honest. And here was the second trade. This was the second trade. I didn't even journal this trade properly because I was very sad. I was very depressed here, angry. I took this trade based on just hopeless. I was hoping to make profit back, to not lose my phase 2 account. Eventually I took it entry here, and you can see this one was a swing entry because I start to do swing trading too, because I'm planning to switch to swing trading. Not switching, because if I start to do a 9 to 5 job, I want to be able to switch to do swing trading and forget about the trading. And once I start to be more profitable, I want to do both, something like that. I want to do both, yeah. But I want to be, you can see how it was also a low probability, because once price tap into this high time frame demand, this was a trade. Price tap into this this was a demand. One price sold this low. There was no H4 supply here, nothing. All this was liquidity, and I did not pay attention on that. I just go on lower time frame. I saw okay, because I use H1 here as my lower time frame, liquidity here. Inducement, I just placed my entry price, just trade more, just stop me out, and then after the few hours, price just reverse back until pushing back down. I lost again 1% here, because on on Wednesday, this was a very bad trade. Anticipation without confirmation, bro. I did a very big mistake here. If you are doing this kind of mistake, please don't do it. Stop it. If you have a clear anti-model system that you are tested, you are using. You know that this anti-model, if it happened over 50 times or over 10 times, at least you will get 5 times or 6 times on it. This anti-model, I was anticipating. It was on Wednesday. You can see I took a long on GBPSD. I consider it as a low probability trade. Why? I will explain to you. I see a confluence here. There was no major time for PY. There was a pullback inducement, section PY, N5 anti-model, undisciplined, not focused, FOMO. See, everything my Pon, Pon also, because I watched Pon that day and I was anticipating. And you can see here, look at the H4. Look at the H4, massive bearish. I tried to force, even because I saw the H4 we come from a daily demand swept with massive push. There wasn't a change of character that confirmed that you have a confirmation for pullback. No, nothing like that happened on the H4, and I went straight to N15. What happened? N15 push. You have an inducement. For me, it's an equal loss. It was a clean, but I was buying where I was trying to buy in the premium of the range, because this above here is a premium, below is a discount. I tried to buy inside the premium, and the order flow is clearly bearish at the moment. What happened? I went to 5 minutes. The 5 minutes, I supposed to wait. I supposed to place my candle above the candle, the liquidation candle. I don't know if somebody use photon here, but if you use photon, you understand what I'm talking about. Place my entry above the candle liquidation. Place my entry. One day, next candle break the previous candle low. I delete my order. Place my orders above the next candle that break. This how I'm supposed to place my entry here. Place my entry here. Place my entry above. Eventually, price trade 2. And normally, I wasn't, based on that entry model, I wasn't supposed to enter this trade, because the trade did not give me the confirmation of give me the first confirmation, but the first confirmation price did not. What did I do? Because I was scared to miss out the move. I tried to anticipate the move that price may be moved without me. What did I do? I just placed my orders at the 50% of the PY, and price just trade 2. This again, I'm not using a risk entry on this pair like a GBPSD and Euro. I'm not using risk entry. I'm using LC1 and LC2 entry model. Eventually, price move against me. This is a low probability. Yes, I consider it as a low probability. Today I took yesterday. Yes, this one. I took a trade entry. This was a day trading entry on gold. FSC, risk entry, everything. This was a medium probability. Everything was clean here. I risked 1%. I went out. Price stopped me out with minus 1%. What did I do? What happened here? You have a clear bullish massive push to the upside. The negative confidence was that we swept some buy side liquidity from the left, and that's why you have this massive bear rejection to the downside. And what happened? Price mitigate the H1 PY inside the H4 PY, and we have a break of structure sweep. You have a flip because we have a supply here. You have a flip, and you can see on the N15. On the N15, what happened? Price came back. You have an inducement. You have another flip period. You have an equal low. One price swept. I wait for change of character, and I set my entry at the 0.25 Fibonacci, and price just trade to it, swept, take me out, and move to my TP because my TP was around this supply, and went back to the downside. Yes, and this is how I lost this trade. But I'm so happy because I lost this here because I focus on my plan. This is the thing. I focus on my plan because once I focus, I'm happy to lose on this trade. But all this trade here, it was based on emotional problem, undisciplined, not respecting FOMO, forcing setup on all this 3 1. But the last one was this one was a swing trade. This is my second time I took a swing trade. I closed this swing trade today on gold around 3 p.m. You can see my entry was yesterday and I closed it today 3 p.m. If you see the date, everything swing strategy, risk entry H1. It was a phase C, medium probability. It was a medium probability here. It was a medium probability. Yeah, as you can see here, you have a lower time frame chain PY. You have a lower time frame sweep PY here. Sweep PY, lower time frame sweep PY H1. Lower time frame no liquid, no inducement, no pullback, no leg inducement, no pullback inducement. And I reach 1%, I make 3%. I close with 3% here. If you can see, no mistake here. Everything was clean. Made my plan, my swing trading plan. Everything was perfect here. The hard time frame was clearly bearish, bullish. Was bearish at this point. It was inside the daily demand. You can see you have a clear. Even the other flows at the moment bearish. What happened? We ship bullish. Once you have this first, second PY, I get in. I target the supply. And what happened? This is how I took the trade yesterday, Thursday, and I closed today 20. You can see, trying to as price hit my TP, went back to the entry point, grab a lot of buy side liquidity and push back to the upside. And you see, this was the swing of today. I just closed a few hours ago. Yeah, you can see. This is everything for this video, guys. If you like, make sure to comment, subscribe, and don't forget to turn on the notification button. Let's go, guys. See you. Thank you guys.